Hello everyone, welcome to the Ichimoku.co chart of the day. Starting with the S&P 500, and here we have the trend continuing to the upside today. Current candle higher, 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 low. Buyers closing with control, the market closing up towards the highs, but a very much smaller body than we saw for the previous candle. It does suggest that even though the buyers in control and showing some commitment, the net momentum throughout the day is not as great as it was previously, and suggests there is some potential for a change of trend back to the downside. Now, the important thing here, however, is the breakout up above the Kijun-sen indicator, a return to a bullish time frame, a bullish up trend in the medium-term time frame. The market has broken out in, I'd have to say, only a moderately bullish manner. It's not overly strong, even though the buyers have shown some commitment. The important thing here is the support that's been shown below the Kijun-sen indicator. So whereas the Kijun-sen had an opportunity to provide resistance and an opportunity to see the buyers lose some commitment around that area, the buyers have shown some commitment in travelling through there. So it does suggest that there is still an opportunity here for the buyers to move this market higher. Importantly as well, support coming in down at the top of the Ichimoku cloud, and it suggests that there perhaps has been an important change of character back towards favouring the buyers in the S&P 500. So a good opportunity. The worrying factor here is the decrease in the size of the white body, and there is potential for this to look like something of a little hanging man type pattern, although the body is a little bit too large for it to be. So let's watch how the market develops tomorrow, looking for a higher high and a higher low for the uptrend to continue. If that doesn't occur and the market does travel lower, looking for support to continue around the Kijun-sen at 2702 and around the top of the cloud in the same area. Now, for tomorrow, we also do need to consider this previous swing low at 2736 as a potential area of resistance, and the market will perhaps approach that to the upside. So just watching how the market behaves around that area. If we break out through there and close in a bullish manner, we could see the market moving up towards this previous window that was opened around this 2800 round number level. And if we do see the buyers lose commitment above and through 2736 and the sellers attempt to take control, we could see a change of trend. So just monitoring very carefully. Importantly, today's candle, besides finding support around the top of the cloud, it was a previous swing high that afforded itself as support around this 2694 level. So change of character from previous resistance into support, and as the trend had developed to the downside and the market had rallied about a week and a half ago, we did see a lack of acceptance above that level. Now we have moderately strong acceptance above that area, suggesting that there has been that change of character back towards the buyers in the S&P 500. Now, just using the Andrews pitchfork technique here in a higher time frame and looking at the swings in the second time frame. We're not looking at a first time frame. This is the major pitchfork technique, and this really does put the context of this downtrend that we had recently into perspective, where we're examining the relationship of that previous second time frame downtrend and the immediate previous first time frame uptrend to this current second time frame downtrend. And here we saw the market trade through the first, second and third warning level, almost to the fourth warning level, and we saw a lack of acceptance down below that third warning level, and the buyers come into the market. So it did suggest that the reaction was very strong, but the buyers are now returning fairly solidly. We have seen the market close above that first warning level, and this suggests that there is an opportunity here for the buyers to move up towards that lower median line around 2791 at the moment, very close to that 2800 round number, and we will be looking to market reaction around that level. And as with our other techniques that we're looking at, we will be looking for any price rejection or lack of acceptance from that area. Now, using the minor pitchfork here, looking at the first time frame trend swings, and this really does highlight the strength of this uptrend now compared to the previous uptrend in the first term time frame, which was that correction. The correction here is much stronger, suggesting that the buyers are very much stronger than previous. So combined with the breakouts above the cloud and above the Kijun-sen, we have a breakout above that first warning line and previously through the upper median line, and it does suggest that the buyers are strong in this market. And for the next day's trading, over the next couple of days, potential for resistance to form for the next day around 2775, and then it does move lower around the 2750 level over the next couple of days. Now, using the Fibonacci retracement technique, and we're examining the relationship of this current first time frame uptrend to the immediate previous first time frame uptrend, and here we see the market testing around that 100% level. So we have parity in these swings, and we've just poked through there in a bullish manner, so not convinced yet that we are going to see this trend continue. If we do see some strong follow through up through that area, you could see the market moving up towards this 161.8% level, which is around the 2848 level. But just bearing in mind that we do have other levels with other techniques before we get to that area.